Hey, everybody, and welcome back to Talk Tickers.
It's earnings season,
It is earnings season,
which means we are back with another deep dive.
and today we are talking all things Macerich.
Ticker symbol MA.
Their Q3 2024 earnings call just dropped on November 6th.
We got the transcript right here, fresh off the press.
We also pulled up some key stock data from Yahoo Finance.
So we can see how Mr. Market is reacting to all this news.
But before we get into all that,
Let's set the stage a little bit.
Macerich isn't just any old company.
They are actually a major player in the retail world.
The third largest owner and operator of shopping centers in the U.S.
So their performance is a pretty good indicator of the health of the entire retail landscape.
Absolutely. And there's a lot to unpack in this report.
We've got a CEO transition in the works,
A massive debt reduction strategy.
and some hints about the state of the American consumer.
So buckle up, listeners, because things are about to get interesting.
One of the first things that caught my eye in this report was the leadership shakeup at the top.
After an impressive 29-year run, Scott Kingsmore, their CFO, is stepping down.
Yeah, 29 years, that's a pretty long time to be in a C-suite position.
Must have been quite the journey.
And his replacement, Daniel Swanstrom, actually has a history with Macerich's CEO.
Jack CA.
That's right. They both worked together as investment bankers at Morgan Stanley, focusing on, you guessed it, real estate.
Small world, huh?
Definitely makes you wonder what kind of dynamic they'll bring to the company.
For sure. But here's where things get really interesting.
Macerich is on a mission to slash their debt.
By a whopping $2 billion.
That's not small potatoes.
They're calling it their Path Forward plan.
And they've already made some serious progress.
Yeah, they're about 60% of the way there.
Using a combination of strategies,
Like selling off some of their assets.
renegotiating terms with lenders, and planning even more asset sales down the line.
So like a massive spring cleaning for their balance sheet.
Exactly. One of the big moves was selling off the Oaks Mall in California.
Which is a bit of a surprise.
But they also acquired full ownership of other properties, like the ones included in the Pacific Premier Retail Trust.
Or as the cool kids call it, PPRT portfolio.
So it's not just about selling off everything.
They're being strategic about which assets they want to hold on to.
And they're not just focused on cutting debt.
They also want to boost their net operating income.
Or NOI. Think of it like the profit they make from their properties.
Oh, gosh, yeah.
And their leasing strategies seem to be at the heart of this.
Which brings us to some pretty interesting insights into the current state of retail.
Because get this,
Doug Healy-Matrix, EVP of leasing, mentioned that while sales have been flat.
leasing demand is up a huge 40% compared to last year.
So on one hand, consumers seem to be holding back.
But on the other hand, retailers are eager to snag space in malls.
It seems a bit contradictory, doesn't it?
It definitely raises some questions.
Like if sales are flat, why are retailers so bullish on brick and mortar?
It suggests they're betting on the long-term future of physical retail,
And that malls will remain relevant.
despite the rise of e-commerce.
Yeah, it's like they're saying, yeah, things might be a bit slow right now.
But we believe in the power of the in-person shopping experience.
And Macerich is capitalizing on that optimism.
For sure.
I mean, they've opened 1 million square feet of new stores this year alone.
That's a lot of retail space.
It makes you wonder what kind of stores are driving this demand.
That's the million-dollar question.
Unfortunately, the earnings call didn't give us much detail on that.
But it's something to keep an eye on, for sure.
It could tell us a lot about how consumer preferences are evolving.
And what retailers think will be successful in the years to come.
Speaking of successful, let's talk about some specific examples.
Macerich highlighted a pretty cool transformation at Tyson's Corner Center.
They replaced a single LL Bean store with 4 new tenants.
And it led to a 40% increase in foot traffic.
And a projected 5-fold jump in sales.
Now that's what I call a glow up.
It shows how they're adapting to changing retail trends.
And creating a more diverse and exciting mix of offerings.
They're not just filling empty space.
They're curating an experience.
That draws people in.
And speaking of creating experiences,
They teased a major development coming to Broadway Plaza in Walnut Creek.
the new Restoration Hardware Design Gallery.
Set to open in 2026.
This thing sounds incredible.
Think multiple buildings, restaurants, wine experiences, art installations,
Basically a luxury lifestyle destination.
wrapped up in a retail experience.
They're really blurring the lines between shopping, dining, and entertainment.
Giving people a reason to spend a whole day at the mall.
Even if they just planned on buying a new couch.
Okay, so we've talked about debt reduction
Okay, leasing momentum.
and these fancy new developments.
But let's not forget about the financial moves behind the scenes.
They raised equity capital through their ATM facility.
And for those of you who aren't familiar with Wall Street jargon,
That doesn't mean they're withdrawing cash,
It means they're selling shares directly to the market to raise funds.
like their own personal money printing machine,
Sort of. They use some of that money for the PPRT acquisition we mentioned earlier.
which involves some pretty complex refinancing maneuvers.
And impacted their funds from operations or FFO.
Hold on, things are getting a bit technical here.
Sorry about that. Think of FFO as a measure of how much cash a real estate company is generating from its operations.
Like net income, but for real estate.
Exactly. It focuses on the cash flow that's important for things like paying dividends and investing in new properties.
Okay, I'm following you.
So the PPRT acquisition, while boosting their portfolio, did cause some short-term dilution of their FFO.
Meaning their earnings per share took a bit of a hit.
But it gave them full ownership of 3 key properties.
Los Cerritos, Washington Square, and Lakewood Center.
It's all about control and long-term potential.
Ah, I see. So by consolidating ownership, they have more freedom to implement their vision for these properties.
Without having to answer to partners.
And 2 of those properties, Los Cerritos and Washington Square, are considered top performers.
They fall into Macerich's fortress and fortress potential categories.
Meaning they're high-performing and strategically important to their portfolio.
They're betting big on these malls.
Seems like they're playing the long game here.
For sure. Now, are you ready for the fun part?
The moment you've all been waiting for.
It's time for.
This is not financial advice.
Remember, folks, this is just us brainstorming.
And speculating based on what we've learned from the earnings call.
So don't go making any rash investment decisions based on our wild theories.
With that disclaimer out of the way, let's get speculative.
You ready?
I was born ready. Hit me with it.
All right, so remember how Macerich is slashing their debt?
And focusing on those high-performing malls.
Yeah, like they're trying to make themselves as attractive as possible.
What if?
What if they're setting themselves up to be acquired?
By a certain online retail giant.
That shall remain nameless.
Dun-dun-dun.
Okay, I'll say it Amazon.
Amazon acquiring Macerich.
Now that's a bold prediction.
But think about it.
Amazon has been steadily expanding into physical retail.
With bookstores, grocery stores, and even department store concepts.
And imagine the synergy.
Amazon could leverage Macerich's prime mall locations for all sorts of things.
Distribution hubs, experiential showrooms, data collection points, you name it.
Talk about a retail powerhouse.
It would give Amazon a massive physical footprint.
Complementing their online dominance.
And putting them right in the heart of consumer traffic.
It's like they'd be playing both sides of the retail game.
Plus, Macerich's focus on higher-end malls
Aligns perfectly with Amazon's push into luxury fashion.
It's a match made in retail heaven.
Or maybe just a wild theory from 2 podcast hosts.
Who have had a bit too much coffee.
Who knows?
Stranger things have happened in the business world.
Remember when Walmart bought Jet.com?
Or in Facebook acquired Instagram.
Those were game changers.
And an Amazon-Macerich merger would definitely shake things up.
Okay, enough speculation for one episode.
But we would love to hear your thoughts.
Head over to our social media and tell us what you think.
Could this wild scenario actually happen?
Would it be a retail apocalypse or a match made in heaven?
Let us know.
We'll be right back after a quick word from our sponsors.
It's kind of fascinating, isn't it?
What's that?
This whole narrative we have
About
malls like struggling
balance
against e-commerce, you
I
know?
don't know about.
And yet here's Macerich
They're like,
showing us a strategy that seems to be working.
yeah, makes you wonder if the mall's death has been greatly exaggerated.
Maybe the key is to adapt and evolve.
Just like Macerich is doing.
Exactly. They're not just landlords anymore. They're like curators of experiences.
They're turning these malls into destinations.
Places where people want to actually spend their time and money.
Like, remember that restoration hardware design gallery we were talking about?
Oh yeah, the one at Broadway Plaza.
That's a perfect example.
It's not just a store, it's a whole lifestyle destination.
It's like they're taking a page from the playbook of those successful online retailers.
Who create these immersive, engaging experiences.
Yeah, give people a reason to actually, get off the couch and come to your space.
Exactly.
Okay, but let's dig back into some of the financial details.
Sure.
We talked about the equity raise and the PPRT acquisition earlier.
Right.
But there's a lot to unpack there.
Definitely.
Still trying to wrap my head around it all.
No worries. It can be a bit confusing. So, Macerich used their ATM facility.
Which, again, for our listeners who may not be familiar.
It's not about withdrawing cash.
Right.
It's where they sell shares directly to the market to raise money.
Got it.
They used some of that money for the PPRT acquisition we talked about.
And that led to some short-term dilution of their earnings per share.
Meaning each share represents a slightly smaller piece of the company's profits.
So why would they do that?
Good question. It gave them full ownership of 3 key properties.
Los Cerritos, Washington Square, and Lakewood Center.
So it's all about control and long-term potential
So they're trading some short-term pain.
for long-term gain.
Exactly.
Makes sense when you think about it.
Especially considering 2 of those properties, Los Cerritos and Washington Square.
Are considered like prime assets,
They're in those fortress and fortress potential categories.
meaning they're high-performing and super important to Macerich's portfolio,
So they're doubling down on their best properties.
betting that these malls will continue to be strong performers.
And part of that strategy involves refinancing too, right?
You got it. They refinanced the debt on Washington Square, which secured them a lower interest rate.
So that'll save the money in the long run.
Exactly. It's all part of the plan.
A multi-pronged approach.
Debt reduction, strategic acquisitions, refinancing.
And of course, that relentless focus on leasing.
It's like they're playing 4D chess with their finances.
That's pretty impressive.
It really is. They're not just reacting to market trends.
They're actively shaping their future.
They're creating their own wave.
Now let's shift gears a bit and talk about the elephant in the room.
The consumer.
Everyone wants to know what's going on with their spending habits.
Right, because ultimately that's what drives retail.
So what clues did we get from the earnings call
Well, Doug Healy mentioned that sales have been pretty flat.
for the past few quarters?
Yeah, it seems like people are being cautious with their spending.
Especially with all the economic uncertainty.
Makes sense.
But then we have this surge in leasing demand,
Right.
which seems to contradict that cautiousness.
It's a bit of a paradox.
Maybe retailers know something we don't.
Maybe they're seeing signs of a rebound on the horizon.
Or maybe they're just really optimistic about the future of malls.
It's a gamble for sure.
But a calculated one, it seems.
Macerich seems to be doing a good job of attracting those retailers.
And creating experiences that draw people in.
Like at Tyson's Corner Center.
Where they swapped out that LL Bean for a mix of new tenants.
Appealing to a wider range of shoppers.
It's all about creating a destination.
A place where people want to be.
Not just a place to buy stuff.
Exactly. They're thinking outside the box.
And using data to inform their decisions.
It's a smart approach.
And so far, it seems to be working.
But only time will tell if it's sustainable. This is what makes it so interesting.
The future of retail is still being written.
And Macerich is one of the authors.
Now, speaking of interesting,
Are you ready for the most entertaining part of our show?
you know what's coming.
Uh-huh.
All right, it's time for the moment you've all been waiting for.
The main event.
This is not financial advice.
Remember, everyone, this is purely for entertainment purposes.
We are not qualified financial advisors.
So please do not make any investment decisions based solely on what we say.
Seriously, folks, do your own research.
Talk to a professional
We're just 2 podcast hosts.
with some wild theories and a microphone.
All right, disclaimer over.
Let's get speculative.
So we've been talking about all these moves Macerich is making.
Right, slashing their deck,
Focusing on their best malls.
creating these amazing experiences.
Like they're getting ready for something
Well,
big.
they're putting on their best outfit.
For a first date.
What
Wait,
it is.
what if they're trying to attract a suitor?
It's a very specific suitor. One with deep pockets and a hunger for physical retail space.
I think I know where you're going with this.
What if
What if Macerich is setting themselves up?
to be acquired by?
Amazon. Amazon acquiring Macerich.
It sounds crazy, right?
But is it really that far-fetched?
Think about it. Amazon has been dipping their toes into physical retail for years now.
With bookstores, grocery stores, those cashierless Amazon Go stores?
And they've even been experimenting with department store concepts.
So acquiring a mall operator.
It wouldn't be a complete shock.
And the synergy.
It's mind-boggling.
Amazon could use Macerich's malls for all sorts of things.
Distribution hubs, pop-up shops, experiential showrooms, data collection points.
They could even turn those empty Sears and JCPenney spaces
into giant fulfillment centers.
Talk about a logistical advantage.
They'd be able to get products to customers faster than ever.
Plus, Macerich's focus on higher-end malls.
Aligns perfectly with Amazon's push into luxury fashion.
It's a match made in retail heaven.
Or maybe just a wild fantasy.
Cooked up by 2 bored podcast hosts.
Who knows, but hey, stranger things have happened.
Remember when AOL bought Time Warner?
Yeah, that was a doozy.
Or when Facebook acquired Instagram?
Those were game-changing deals.
And an Amazon-Macerich merger.
That would definitely shake up the retail landscape.
Okay. I think we've spent enough time in the land of speculation.
It's fun to think about, though.
But seriously, folks,
This is not financial advice.
don't go betting the farm on Amazon buying Macerich.
Do your own research.
Consult with a financial professional.
And remember, past performance is not indicative of future results.
We're just here to spark some thought-provoking conversations.
And maybe have a little fun along the way.
So what do you think, listeners?
Could this Amazon Macerich merger actually happen?
Would it be the retail apocalypse or a brilliant strategic move?
Head over to our social media and let us know.
We love hearing your thoughts and theories.
And who knows, maybe one of you will predict the next big merger.
That's all the time we have for today's deep dives into Macerich's Q3 earnings call.
We covered a lot of ground today.
From leadership changes to debt reduction.
From leasing momentum to experiential retail.
And of course, our trademark speculative scenario.
It's a dynamic time for the retail industry.
And Macerich is definitely a company to watch.
We'll be keeping a close eye on them.
And bringing you more insights as they unfold.
Thanks for joining us on this earnings call adventure.
And be sure to tune in next time
for another exciting deep dive
into the world of finance.
Until then,
happy investing, everyone.